I wanted to show the year-to-date chart. Today, as I video this, it's July 1. The year-to-date chart that I have here in red is the S&P 500, and you may have heard the news. The S&P 500 has had the best 6-month start to the year than in over 10 years. It's over 16% from the beginning of the year until now. This is the red S&P 500. I overlaid that against the DFA small cap value portfolio. The DFA small cap value portfolio is in blue, and it's up as well, but it's not up as much as the red. I'm going to relate this to a Jeff Bezos quote. Jeff Bezos started Amazon, and he is quoted recently as saying something to the effect that the internet exists to confirm all of our biases and make us feel good about ourselves. And if you think about all of the different searches that you can do, oftentimes the internet just serves up to us exactly what it is that we're looking for. And I think given the news and everything we're hearing about right now, we're hearing a lot about the S&P 500. But I would ask, what is it that the prudent investor ought to be doing given a chart like this with respect to the position they have in their investments with the S&P 500? And you may be thinking about this in your 401k. You have 3 or 4 different mutual funds in your 401k, and the S&P 500 funds are doing really, really well. They're going up and up and up. An inclination you're going to have, an instinct that you're going to have, is to sell something that has done less well. Take, for example, this small value fund that's done less well, and you're going to want to pile on and pile in to this fund. But that would be a mistake. Look at the max chart. If we go back 20 years, the S&P 500 trails the Russell 2000 almost all the time. So when the S&P 500 is up above it for a short period of time, the right thing to do, the prudent investor, will sell what is up and buy more of what's down so that it's prepared for that next long period of time where the small value will very likely outperform. Over long periods of time, the S&P 500 is the lowest performing asset class among all of the asset classes that you can invest in over long periods of time. And so we want to be diversified, we want to be in it, but as it's gaining and gaining and gaining, we want to help you by diversifying away from it. Now, if you're invested with us, that happens automatically as part of your investment strategy here. But if you're working with a 401k and you want to talk about that, or you want to be introduced to academic investing, where we're not trying to predict the market, but we're looking at taking the market's best components and always diversifying into them, then check out the events that are coming up. The next one is Friday the 19th and Saturday the 20th of July, and then we have another one in September as well, and we'd love to have you. Thanks for checking it out.